Well, we bring in Noah Poponak. He's an analyst with Goldman Sachs, has a buy rating on Boeing, a $261 price target on that stock, which is now around $204. Noah, welcome. Take us through the fundamentals of Boeing's business and what you see there that gives you confidence that the stock can perform as you think it will.
Yeah, so a few things I would highlight, overall and from what we learned today. I think one of the more important things with Boeing where you have to continue to view it through this lens is that we're talking about a stock that's near 200 that pre-pandemic was over 400. And so you've highlighted that the numbers today are a little bit mixed. There's some good, there's some bad, but there's just not a lot in the stock price. The stock is not asking for much. Expectations remain low. They did miss earnings, but they beat free cash flow. And because of some of the accounting methodologies at the company, the free cash flow is a better metric over time. Stock is more highly correlated to that. And I think Phil, nailed it where the demand is really strong. What's holding them back right now is supply chain, but demand for the airplane's really strong, and that's the better long-term indicator. So I think the fundamentals are still being a duopoly in a long-term secular growth market, demand to fly 2x GDP pretty consistently over time. And all those things are true of Boeing, kind of regardless of what the numbers were specifically to that.
You referred back to a time when Boeing was a $400 plus stock, and we all remember that. It wasn't that long ago. Was that a fair price for that company at that time, or was it just overvalued? What was the story?
I don't think that was a fair price at the time. We have a buy on Boeing today. We recommend Boeing today. We did not recommend Boeing at that time. Now, that's not to say that we've always had the stock right. Mm-hmm. We had a sell on it while it was moving higher during that period. But, Boeing's a cyclical, and cyclicals, when things are really good, the market will get a little too excited and put a high multiple on high earnings. And when things are really bad, the market will kind of overshoot to the downside and put a low multiple on low earnings. And, during the pandemic, Boeing got to that spot on the downside, and it's now starting to recover. So I don't think that was a fair price, but the inputs into the business that existed at that time will exist again, because the long-term fundamentals are so good, just a matter of time. And at the current price, you're looking at a low multiple on low earnings and cash flow.
We're showing a 135 PE, Noah. So what do you base the multiple off of? And have they put production issues firmly behind them or not?
So, as I alluded to earlier, Boeing's earnings are tricky because they use program accounting, so the cash flow is often different than the earnings. The economic engine of the business, the cash flow statement, often different than the P&L. And at the current volumes, it's a high incremental margin, high fixed cost business. With this constrained volume, the earnings are just kind of in flux while the cash flows are better and are improving. So the PE that you see, on a Bloomberg screen or something right now is not, I don't think, hugely relevant. The free cash flow target they provided at their investor day, $10 billion, 2025, that's $17, $18 a share in free cash flow. We're at $20 a share in free cash flow in 2025, 2026. So that stock price just over 200. You're basically 10 times free cash flow. So it's a pretty cheap stock on the cash flows.
All right, Phil, let me ask you to,
in terms of,
oh, pardon me, I'm sorry. No, let me just turn to Phil, if I might, for a minute and get a sort of a synopsis on Boeing's international business, particularly China.
Well, Dave Calhoun is optimistic at the fact you are seeing huge numbers in terms of people returning to travel as they come out of the COVID lockdowns in China. The numbers look identical to what you saw in the United States, what we saw in Europe. As both of us came out of our COVID lockdowns, you saw a huge demand for travel, and that is what Boeing is seeing in China. So as a result, the airlines there are going to, A, need to use the aircraft that they have, and there are some 737 MAXs that are on the ground there that are not flying yet, so they need to get back into service, and they likely will soon. And then on top of that, the airlines there, just like airlines here in the U.S. and in Europe, will eventually say, we need more aircraft. Well, guess what? There are about 100 aircraft, 737 MAXs, that have been ordered by Chinese airlines, that have been built, that are on the ground at Moses Lake in Washington, that are ready to be delivered. Obviously, some rework has to take place. But at some point, the optimism at Boeing is that they will resume deliveries of those aircraft. Does it happen in the next 6 months, the next year? Who knows? That's a geopolitical question involving the United States and China and trade relations, et cetera. But that's the expectation.
And finally, Noah, a quick word on production issues and whether they've put those behind them now.
Yeah, sorry. So, I think that's one of the bigger hurdles left in the business, especially in the near term. The aerospace supply chain recovery is kind of lagging the broader global supply chain recovery. Airplanes are very complex parts. There's a lot of individual parts. Boeing and Airbus have thousands of suppliers. And it's an industry where things got really tough during the pandemic. So they really had to hunker down, and coming out of that is taking longer. So that's one of the bigger hurdles in the near term. The comments from GE this week were incrementally positive. From Boeing this morning sounded better, talking to its supply chain. So I think we'll see that really improving as we move through 2023.